Well, good afternoon, everyone. This is Scott Thompson, Senior Manager and Coach with Schwab Coaching. Great to be here with you today. We give a shout out to Barb, who's in the chat. If you have any questions, feel free to chat those questions over to Barb in the right side of your screen, and she'll be happy to answer those. Also, I go back through those, and if there's any other ones that need additional explanation or just great questions, I'll repost those in the YouTube comments. So you'll see those. I've posted some scripts again at the top of the chat. So if you scroll up there, you'll see some script links that we'll be using today. I've been doing some enhancements with the tools that we've been exploring over the last few weeks. And so I don't know if you like going back and forth between like the live platform to run scans that use those studies and then have to go back into your paper money to do that. So I figured out a way. It's not 100% foolproof, but it's a great way to just stay in the paper money to see those potential buy signals and sell signals. So we'll be talking about that a little bit today. Give a shout out to Rojo and Eva and Jay Richardson and Octavio, bienvenido, and to everybody else. I almost went into Spanish there, but great to be here with you. Before we get started, let me go ahead and remind everybody that our information today is for general and educational purposes, not to be considered a recommendation of any particular strategy or stock. We'll be looking at several today. Schwab does not recommend the use of technical analysis as the sole means of investment research. We are using the paper money software. There are some significant differences between the paper money and the live money platforms. We'll be talking about stops today. There's no guarantee that execution of a stop order will be at or near the stop price. Be aware that all investing involves risk, including the loss of principal, and past performance is no guarantee of future results. As we kind of do on our sessions here in the stock investing for beginners, we have an 8-lesson series that I go through probably about once a quarter. So we'll update those probably in April. And then the sessions in between are kind of be little bonus sessions on how to implement the different things or pieces of this 8-piece puzzle. And so, we did go over all 8 of these lessons, including the fundamental analysis aspects, the introduction to technical analysis, position sizing, and all those different things. And so these lessons are actually found on the homepage of our YouTube channel. So if you just go into Trader Talks webcast on YouTube, and then on the homepage, if you scroll down to Stock Investing Basics, this is a real simple playlist of just all 8 of those lessons. I did chat that link in, but here's the page there, and you can go and just start on one and just go through. It'll play the whole way through for you. The other webcasts that we do are going to be on the playlist page here. And if you scroll down to Stock Investing for Beginners, this has our full playlist. So all the extra bonus sessions, all of the sessions that were done prior to the 8 lessons that I did. So you can find those there on that View Full playlist. And I'll chat this link in as well so you have it. So there's the link to the full playlist. So let's go back over to the slides real quick. I want to go over just quickly a little reminder of what we're doing here. In lesson 1, we talked about why we invest. The big takeaway from that lesson was that trying to convince us or you that time is one of your greatest assets. And this is just a little example of Maria and Anna each invested $3,000 a year on January 1st for 10 years. And then Marie started 20 years ago and Anna started 10 years ago. And you can see the difference in the growth. About $157,000 of growth there on the side of Maria, and it's just time. So, one of the things that I hope to help you decide to do is to get started with whatever works best for you and your strategy. Of course, past performance does not guarantee future results. We've seen the market sell off a little bit in the last couple of days, particularly the tech stocks. I don't know if we've had AMD and MU in our account for a little while, and those are down a skosh today. So we may take a look at that. We actually have something to do on those today. But what I wanted to do is to go over our simple sample investing plan that we refer to as 2 green arrows. And the objective of this plan is to buy and hold uptrending stocks that are in the S&P 100. And that's kind of a high level assumption that the S&P 100 stocks and maybe even the S&P 500 stocks are good companies that have okay fundamentals. That may or may not meet your rules, but the idea is that we're using a watch list of well-known, well-established companies, and the objective is to buy them when they're uptrending and hold them until the trend is over. All right. There's an S&P 100 public watch list. There's a whole bunch of other public watch lists that are available. We've modified ours a little bit to be between about $200 and $220, just because the portfolio that we're using as our example is like a $10,000 portfolio. So, there's some real expensive stocks out there in the marketplace, and sometimes a little challenging to buy, a $900 stock or $1,000+ stock. All right. And so, when we take a look at the different companies, and you can modify this to whatever best suits you. This is just what we're using for our example. Now, when to buy, the question often comes up is, well, what's the buy signal? And so there's a little bit of a chart set up. There's a link in the description for two different charts. There's one for what we call the 2 green arrow chart. And then a couple weeks ago, I added a 1% moving average envelope that's just below the 50-period moving average to help us set our stops. And so we generally will look at the stocks on a 3 to 6 month chart. There's a 50-period simple moving average with the breakout signals. Now you want to add that when you're playing with your studies or adding your studies. There's a little box that says show breakout signals, and you'll want that to say yes. We use an 817-9 MACD. That's a little different than the default 1226-9 MACD histogram. They're both valid. 817-9 is just the first one that I learned, and this one I like. It's a little faster than the 12.6 or 26-9. And now the buy signal is just simply when there's green arrows or that breakout signal on the moving average and the MACD. But there's a little key. The moving average has to be rising. So if the moving average is falling, which means the general trend is down, it is possible to see the stock go above there and give a green arrow, but that's not the buy signal. The buy signal is when the moving average is rising and we get a green arrow on the MACD and the moving average. So we'll take a look at that as we go through some examples today. Then the question becomes well, when do I sell, right? Many of you have asked, when do I sell these stocks? And the easy answer is there isn't really a sell at a target rule for this particular plan. We set the initial stop 1% below the moving average. And like I said, a couple weeks ago, we added a 1% moving average envelope that makes it easy to see where that stop should go. And then we just let the trend continue. If you remember, that's the objective of this plan, is to try to stay in that trend longer term. A day like today, especially with stocks like AMD and I think MU that were down like $40 today, these are stocks we've had in our portfolio really for months. It's a tough deal when it drops so far. And we've had a couple sessions over the last several months where we've talked about implementing a profit-taking strategy. So you can go back and watch those videos and where we talked about this. But the general idea for this plan is to just let the stop knock us out of the trade, and therefore allowing us to stay in the position as long as possible. Okay. So I see a question in there from A2018. Can the scan research tool be used for ETFs? Yes, it can. You can use that really for any watch list that's available there. And so that's great. But we don't talk about those specifically in this webcast. Go see, as Barb says, go watch Rachel on Monday or Kevin and James on Fridays. We have 2 really, really good ETF webcasts. All right. Now, the stop adjustment rule, this is kind of what kicks in today, is when we get a new green arrow buy signal. So we're going to be looking for some new buy signals in some different watch lists and sectors. And one of the first things that we do, though, generally when we have a portfolio, is we're going to review our portfolio for stop adjustment signals. And so we have 2 of those. If you're in a stock and it gives a new buy signal, if you wanted to, you don't have to, but you could move that stop up 1% below the moving average. Again, with that 1% moving average envelope, it's really easy to see where that stop could go. Or, and this is the one that I prefer to do just because I don't have to do as much. So this, maybe this is the lazy way, but just wait for the two red arrows. Okay. Now what is two red arrows? Two red arrows is when the stock closes below the 50 period moving average and the MACD histogram has gone down below 0. So, when that happens, we do have something to do or to consider, and that's to adjust our existing stop. Now, a couple rules associated with that. We don't ever lower our stop, okay? So if the stop's at 50, the stock closes below the moving average, and maybe the low price that day is at, say, call it what, $50.12. We're not going to move the stop 3% below that because the stop's already at 50, right? So we do want to watch that. Now, the last thing I want to go through here in the slides is to take a look at our daily routine. Now, the daily routine, we review our open positions for what? This is important. We review the open positions for the stop adjustment signal. There's really not a profit-taking exit in this simple plan. Now, you could add one. We've talked about adding one in a couple signals or sessions before, but this plan just basically says move the stop up, move the stop up, move the stop up. When the trend changes, it'll knock us out. That's the idea. All right. Now, the other thing that we would do after we've reviewed our open positions, we would review whatever watch list, excuse me, whatever watch list we're trading for new opportunities. And we've talked about that. We've been using the top-down analysis. Sorry, I caught the mute button there, I think, so I hopefully didn't cough in your ear again. Whatever watch list it is you want to trade, you would look for those buy signals. And we've been doing the top-down analysis where we've done a quick market posture or market trend review. Then we looked at the top performing sectors, and then we ran the scans in those sectors. And that's what we're going to do again today. All right. So let's see. Morning Rush is saying, can you please give us some insights on the simple moving average versus the exponential moving average? Let me come back around to that in a second. The last thing that you want to do in your daily routine is be aware of earnings. Now, AMD, I believe, today had earnings. Whatever was said today, nobody liked it. I think AMD was down about $40. So you have to decide whether you want to hold over earnings, whether you want to try to collect those dividends, which could be come to an end. They're not guaranteed. And those events can move the price of the stock. And our plan is really just to hold over the earnings. We're not going to be selling the stock every 3 or 4 months just because earnings are coming up. It's just not part of this particular plan. Now, on a weekly routine, you may want to do what we've been doing each week is determine that market posture. But those are the rules that I wanted to do. Now, let's come back to Morning Rush's question. Let me jump over here to the Thinkorswim platform. And I want to do a few things in here before we jump too much. But the question on the simple moving average versus exponential moving average, simple moving average is just what it sounds like. It just takes all the data, 50 days in this case, takes the closing prices and averages them out and puts equal weight on every single day. The exponential moving average puts much more weight on the more recent activity, price action. So the exponential moving average tends to be faster or react more quickly to price. And there's nothing, inherently good or bad about either moving average. So we just use the simple moving average in this particular plan. All right. So the very first thing, now again, you can scroll up to the top of the page here or the top of the chats and get these symbols. But one of the things I want to do is right here, I can customize my layout. You can see I've already got sector over here. And so I like to have the sector in my list so I can see which sector these stocks pertain to. But I've copied in 2 other ones. One is essentially showing how many days the stock has been above the 50 period moving average, and then how many days the MACD has been green. And so I want to show you, number one, how to add these into your list of column headers that are available, okay? And so if you can go up and grab this symbol. Again, it's in the chat. It's also in the description. But if you go, do a Control-C to copy this, go up here to setup, open shared item, and then Control V and hit preview. Now I've called it above the 50 MA. You'll see the one I have says SMA. I had to change the name a little bit, but when you import it, you can name it whatever you want. I would just name it something that's easy to find, easy to remember, and easy to see. It's like, oh, what does that tell me? So after you click import, then that's going to be in your list of sector or column headers, which I'll show you in a second. So let's go through that again with this days above the MACD. Now, again, this is in the chat. It's also in the description, but just highlight that, that link, do a Control C to copy it, go to open shared items over here, top right, click setup, click open shared item, and then there in the URL, just do a Control V like Victor to copy it, hit preview, and again, I named it day MACD green. You know, these you don't have unlimited characters here. And so, you know, make it again something that you remember what it is. You can call it whatever you want by renaming it over here and click import. But mine's called days MACD green. I spelled it out for yours because I had GRN on mine. And then once you import it, again, these are now column headers that you have access to. And the reason that this is really cool, watch this. So we're going to come over here on our monitor page. We're going to go over here to the gear, and we're going to add those little tricks, okay, the tools. Above 50 SMA. Now, again, mine is called SMA. I changed the one I just uploaded to MA. They're exactly the same, but I'm just going to click on that and then move it over. And then if you type in MACD, you should be able to find your days, MACD green or GRN. This is how I named mine. Click add and click OK. And so hopefully this doesn't take too long to load. But here's kind of the fun part here is what is our buy signal? Okay. What's the buy signal? Do you guys remember? The buy signal is when the stock's above the rising moving average and the MACD goes green. So what's kind of cool here, you can see buy and sell signals right here in these columns. And the sell signal is if the stock closes below the moving average, then above 50 SMA or above 50 MA is going to be red. Okay, and it doesn't keep account for how far below the moving average it's gone or how many days. But if you get a red signal here, then that's a signal that we need to do something on these two stocks. So let's go look at them. Let's go look at AMD. Okay, AMD. And this one, again, we had earnings over here. It gapped down, and it was down 17.31%. Now, in hindsight, we could look at this and said, well, you know, here was the high at 267. It got back up there about a week and a half ago. Maybe if we were really smart and knew, right? If we knew that was going to fall back down, we would have sold it when it was up there, but I didn't know that, and so hopefully you did. But, you know, it hit up there, similar high, came down, gap down here. And so the question now is what do we do with this? Well, we have two red arrows. We got a red arrow on the MACD a couple days ago. The stock closed below the moving average today. The rule says to put the stop 3% below the low price today. And if you look at the low price, let me go in here and make my font a little bigger for everybody. Okay, so today's low, you can see the L value just right here. But at today's low, you can see was 199.15. So the rule says to put the stop 3% below 199.15. So we take our calculator, 199.15 times 0.97. That's 3% below that low price. And that says to put the stop at 193.17. Our current stop, if we move our cursor over that, our current stop is at 196.91. So this is one of those instances where we wouldn't lower the stop. The stop is where it is. We've got some support in here, hopefully that holds. I think there's a good chance we get stopped out of this tomorrow with the stock kind of wiggling around a little bit more. Really the only thing that's going to save us on this one is if the stock gaps up a little bit and then rallies tomorrow, which, you know, who knows what will happen. But this is one of those where we would not be lowering our stop. We would just let the current stop do its job, which is to get us out of the trade. And if that happens, we still actually end up having a decent profit on AMD. Okay. So anyway, but it got hit pretty dang hard today. We lost $158 on our 4-share position. So that got smacked around pretty good. All right. The other one was NVIDIA. If we go back to the charts, pull up NVIDIA. NVIDIA, our stop is down here a little ways. We got a red arrow actually yesterday, and so we could have done this yesterday. Let's go ahead and look at that as if it was yesterday and see what we could do or would have done. Okay, so yesterday the low was at 176.23. Take our calculator. So 176.23 times 0.97, and the stop would be at 170.94. So our current stop is not at 170.94. The current stop's down here at 162. So let's go ahead and look at that, 170.94. All right, today's low is 171.91. So if we want to move the stop, it's really easy. You can just left click on this and drag that up. And we said 170.94. You just get it in the ballpark, and then you can click edit, and you can change your stop here to 170.94. Now, write this down in your notes. If you haven't paid attention till now, stop what you're doing. Pay attention right now, because this is really important. I'm going to hit confirm and send, and we're going to send this out there. It's a stop order, no guaranteed to get filled at 170.94. That's just going to trigger a market order. We send that off, and now we know where our stop is. Now, here's the important part. Anytime. How often? Anytime. Anytime that you're going to set a stop order, one of the things that you want to ask yourself is if that stop makes sense. And really what I mean by that is if I got stopped out at 170.94 and it held support in that neighborhood, how would I feel about that? Am I okay getting stopped out at 170.94 when it looks like, right? When it looks like we've got some support just below that. And so most technical based traders would probably look at that and say, well, I don't want to get knocked out at 170.94 if it looks like there's some support at 170. And so they might say to themselves, I'll just put my stop down below the 170 by a little bit, maybe 1 or 2%. And then if I get stopped out, it'll be because at least intraday it broke that support level. Does that make sense? And so on something like this, I would take the rule, see if I have some support in that area. And in this case, I don't really want my stop above that very, very close support. And so I might just drag that down here somewhere below 170. Let's just put it 168. That's like $2. And so I'd have my stop down below support, trying to let the trend again, which has been just sideways since we got in this thing, do that. But I think that's an important concept. No matter what the trend has been, is if you're going to adjust your stop, be aware of where that stop is. Okay, and that's what Eric Goldberg said. So good comment there, Eric. Good, great question. Ian says, if you have time at the end, can you talk about other trading strategies? We'll see if I have some time there, Ian. But if you have some specific questions about that, feel free to chat that into the YouTube comments, and I can answer them maybe better there. All right. So this is really cool here that we have these added tools, and I can see very quickly whether or not I have something to do rather than look at each stock individually, which is what we've done pretty much every week until this point. I go in through and look at every stock, but now I've got a real quick way that I can see, oh, that's below the moving average. I probably should do something on that one. This one's below the moving average. I probably should do something on that one. Now, the other thing that's kind of cool here is if I sort by this column, I can see which MACDs are red, but more importantly, I can see which MACDs have turned green recently. So our kind of goal today is going to be looking at green arrows that we've received on the MACD when the stock's above the moving average like they are here, and see if there's a valid buy signal on those. So just kind of keep these in the back of your mind here. Mosaic, Dow, and WMT have a new green arrow on the MACD within 3 days. Now, all of these, okay, all of the ones that have a green arrow on the MACD and the moving average are technically valid buy signals. We're just a little bit late to the dance, right? So the idea here is if we would do this every day as part of our daily routine, I can identify buy signals and hopefully, right? Hopefully we catch something like an XOM or an XOXY that have been above the moving average for 33 days or 151 days. Do you know when we bought Johnson & Johnson? Well, you can click on your P&L open. Our purchase here was back in August last year. And we've just been, monitoring that position. And when it gives a new green arrow, sometimes we'll move the stop up. All right. So that's kind of a cool thing here. But remember these three symbols, MOS, Dow, and Walmart. And we might come back and take a look at those. Now, I did see that there is a survey here in the link. After the webcast is over, really appreciate if you could fill that survey out. There's like 2 questions, and some scores in that. But I'd really like to hear from you what you'd like to learn more about, like to see more. Ian talked about different strategies a little bit. So if you'd like to see some of those, I have been thinking about adding in some additional strategies for 2 green arrows. So things like that, please take some time. I do read each of those comments. I actually read each of those comments for every survey that we do, part of my job. But anyway, it's great to hear from you, and I really appreciate the extra time that you put in to type out, your thoughts and your concerns and your questions. All right, now let's go back over to our top-down analysis, and we're going to go through this process again fairly quickly. But I want to show you how I've added in these 2 columns to the search results page so that we can all stay here in the paper money and I don't have to run the scan in the live account. But let's go over here. Okay, review the market. This is our market posture analysis, and that's where we start our top down. Go to charts. I've put this in here, but if you go to that 3 chart grid, it's in the description. It's also at the top of the chat. But this will load up our 3 charts for our market posture. We take our first chart, we maximize that cell, and this is a weekly chart. Can be 3-year weekly, 1-year weekly, doesn't matter. But what we're doing is we're looking for the 10-period moving average in relationship to the 40-period moving average, and this one's really simple. If the 10's above the 40, we're long-term bullish, okay? Bam, that's what we were last week. We are still that right now. Then we just arrow over to the next chart. Apologize, coughed in my there again. Now, the 30-period moving average, the way that we generally look at this one is if the 30-period moving average is rising, we'd be, intermediate bullish on this. You can see the 10-period moving average has kind of been oscillating back and forth. We did make a little bit higher high a week or so ago. If you drew a trend line, let me see if I can draw this here. But if you drew a trend line off of these recent lows, and off of these recent highs, we've got a pretty nice little channel going on right now. And so I think we could argue that we're intermediate bullish. Last week when we did this, the moving average just started to go a little bit flat and we made a little bit lower low. So that's why last week we were neutral to bullish. But if you wanted to stay on neutral to bullish, I think that would be acceptable. Based on that moving average looking like it's rising again, I'm going to go ahead and put intermediate bullish on our posture here. And then next one, we just go over to the short term. In the short term, you can see that we've had these Williams fractal candle signals. Okay, and this link is in the description as well. But we've kind of had some lower lows and then a higher high over here, a little bit higher low. Looks like we might have made an intraday lower low here compared to the last one. So I'm going to still say this one for me kind of changed from neutral to bullish to just neutral. Okay, and then let me give you a rule to get out of neutral. Okay, this is what some technicians like to see. Let me go ahead and draw some resistance lines in here. So up here, we have a resistance as an area. I would say the area is kind of there between about 6980 and 7000. And then on the low end here, we have just some choppiness, right? It's kind of gone. We have this low today, this low over here that kind of bounced off of there. So this is kind of the range on the low side, call it 6,800 to 6,789 or so. But for me to get out of short-term neutral, and this takes a little bit of time here, you know, what I like to see and what some technicians like to see is they like to see the stock actually break out. So let's go positive first. Let's say we get some green arrows or some, green candles, and we break the resistance. Okay, we close up above this 7,000. Before I change back from neutral to back to bullish, I'm going to want to see the market basically test this area as the new support. Does that make sense? So I'm going to see it, break out and test as new support. That would change me to bullish. If we did the same thing kind of on the downside, I'll just draw the trend line. But, if we went down for a little bit, broke the support, and then kind of rallied back up, tested it as resistance, and then went down again, then I'd go to short-term bearish. But until that happens, I'm going to be short-term neutral. And what does short-term neutral really mean? Well, it means that you get frustrated with what's going on in your portfolio. You see some profits one day, you see some losses the next day, and it just goes up and down, up and down. Okay. But that's basically our posture. Okay. So that's what I would say is our posture. Again, there's nothing inherently special about how I do this, but I think it's important that you understand what your own analysis is. And once you start seeing some neutrality in your analysis, you're probably going to see the market chop around a little bit. Okay. Now, what have we done afterward? Well, after this, we've gone to our sectors and just compared which sectors are outperforming. Now, I'm going to detach this here so it's just a little easier to see. Okay. And we added this 3-month percent change column header. Now, this is also in the description. It's also in the chat. But it's important here, the way you're doing this top-down analysis is we're trying to identify first what the trend of the market is. Then we're looking for the sectors that are outperforming the market. So this 3-month percent change really helps with that. You can sort by this. If you sort by the symbol, right, then you have the different symbols over here. I've added a description so we know what that is. And then if you sort by the symbol once, you can get the lowest or worst performing sector, which happens to be technology. If you click it again, it'll sort from the high, the best performing sector, down to the lowest. And so what we've done is we've just identified what are the top 3 sectors, and we had a little bit of change this week. Okay. It's energy, materials, and this is new, consumer staples. Okay. So we do energy, materials, and then we've added our consumer staples over here. And then what have we done after this? After we've identified the, the top performing sectors, what we've done at this point is we had to go over to our live account, right? And then, we run that scan because it has a study or two in it, right? And you can still do that. But I was trying to figure out a way, that we can kind of do the same thing, but stay here in paper money. So let me show you what I did. So on the scan tab, let me just shrink this over. Just remember energy, material, and consumer staples. All right. So at the very top, if you hit reset, it'll give you basically this layout. And you have net change, volume, percent change. Now, we first of all said that we want to scan where? Do you guys remember where it was? S&P 100, right? So I'm going to put intersect with S&P 100 over here because we're going to use the scan in feature for the different sectors. Now, really the only stock thing I need up here is the price. We said, well, I want the price to be somewhere between 20 and 220. So if we put $20 on the low end and 220 here on the high end, it knocks out about 46 stocks. Now you can go up to 300. You can go up to wherever you want here. But we'll put the 220 because that's what was in our plan. Now, volume-wise, if you wanted to add one in there, you could do that. I'm just going to take these out. So all I really care about is the price. And I'm going to do a couple things. Number one, scan in. I'm going to use the sectors. Remember what sectors? Energy, materials, consumer staples. So we're going to start off with by industry, energy, select all energy industry groups, right? And they're going to intersect with the S&P 100. Now, before we do this, though, this is kind of the fun part that, is the new tool, the enhancement for today is come over here to the gear and customize it. And let's go find those column headers that you just added. Okay, so here's above the 50 MA, remember? And then we did one on the MACD, MACD. And mine says day, MACD green. Yours will have the GREEN. And so if I put those in there, then I can see in the energy sector which ones have buy signals or not, right? Just quickly. So I'm going to click OK. And now those column headers are here. And I'm going to go ahead and move them over a little bit. It's kind of wonky how this does this. But right here, I'm going to scan in energy. I'm going to scan in the S&P 100. And if I hit scan, we can already see there's 3 matches here. All right. So let's interpret the data that's come up here. We have above the 50 SMA. What does this number mean? That means COP has been trading above the 50-day moving average for 43 days. Chevron has been trading above the moving average for 25 days. And ExxonMobil has been above the moving average for 33 days. Okay, these have been trending a long time. Well, not long. That's only, what is that, a little over a month, 2 months. Now, the MACD, what about the MACD? Now, again, our plan is really simple. You would want to add in your own parameter for like, well, how soon or how close to that green arrow on the MACD, which is usually the second green arrow, that is the MACD, how close do you want that to be? Well, I like it to be within 1, 2, 3 days, really. But none of these are within 1, 2, 3 days. So these are all a little bit older buy signals. You guys see that? All right. And again, if you haven't filled out the survey, please do that. We've got about 10 more minutes here before we're going to end up. So we're going to do some trading together. Now, if I do run this in the S&P 100 and I find, you know what? Yeah, well, we already own COP and XOM in our paper money, right? Do you guys know that? XOM, COP, we've already got those. So if I wanted to broaden this out, how could I do that? How could I move this out a little bit to see if there's other energy stocks? Well, I could bump this up to S&P 500. Okay, now I've got 21 matches. Let's scan that one. Okay, and then I'm going to sort by this MACD column header. And so let's take a look at what these numbers are telling us. So if it has a red arrow on the MACD, just not a buy signal, and I'm looking on this column over here for something between like 1 and 3, really. And what do I see? Valero. Valero looks like it's given a recent buy signal on the MACD. It's been trending up for about 22 days, so pretty good chance that that moving average is rising. And of course, all of these that have 2 green boxes technically have a valid buy signal. It's just a little bit late, right? So again, the purpose here is to do something like this on a daily basis, certainly on a weekly basis, where you could identify what stocks have new buy signals. So let's go look at Valero, okay? So let's pull up our chart here. I'm going to change this to single. And this is our normal study set, which again is in the description if you want to. I've already shared this chart, but there's the 50-period simple moving average. This dotted purple line is that 1% moving average envelope. And that's just going to help me see to where to put my stop. And so the question would be, let's pull up Valero, VLO. Do we have a valid buy signal? Okay, it looks like they're going to have a dividend that pays out tomorrow. Okay, so some people may want to wait till after the dividend goes. We don't own the stock here, but we would want to identify whether or not this is a valid buy signal based on the rules that we're trying to follow. Okay, so a couple questions. This is what I see as a technician. This is what some technicians will look for. Is they're going to go and identify resistance. So I'm going to draw a little horizontal line, right about that neighborhood. Looks like we had some resistance about 191.85. We got a close above the resistance at 197.41 was today's closing price. And the moving average looks like it's been rising a little while. It's been a little bit flat over the last little bit, but it did tick up again today. So I would say we have a valid buy signal on this stock. And so if we wanted to set up the buy order, we could do that. So very first thing I'm going to do is just identify where that moving average envelope is. Do you guys see that? Look right over here at this number. It's going to be right about there where my arrow is. So that moving average envelope, 1% below the moving average, is at 174.70. That's where our stop order is going to go. And then we've been investing up to $500 in a particular position. So this is a pretty expensive stock at nearly $200. So we can buy 2 shares of this and we'll put a stop at 174.70. Now, how do I do that? Really easy. Right click, just about right there at the closing price. Buy custom with stop. We're going to put our stop at 174.70. Okay, which you can actually still see up there, 174.70. And we're just going to go in there at the closing price. We're going to put an order in there at 197.41. And that link right there is why it changed. But let's go change this back to 174.70. And we want that good till canceled. And we're going to do 2 shares. We can lock that link up and we get buy 2, sell 2. We hit confirm and send. And this is going to be a limit order. What does that mean? Well, if the stock opens above that, it'll have to pull back down below 197.41 for the order to fill. That'll activate our stop order at 174.70. Again, no guarantee we get filled at that price. And we put that in our 2 green arrow group, and we send that order off. And now we have a limit order there for tomorrow, kind of going through that process. All right, let's go a couple more here more quickly. Scan. Now, what was the other sector? Well, we did materials, right? So let's go back over here to S&P 100. Let's go to materials. Now, materials was the other sector that's outperforming. It's one of the top 3. We'll do all materials, and I hit scan, and I have one stock in the S&P 100 that has that buy signal. Okay, how recent is this? 2 days. So 2 days ago, we got a buy signal on the moving average. Now, we actually already own Dow. We bought this one last week, I think. Yeah, 122, so a couple weeks ago. But we can go through the process on Dow. If I wanted to have more results, again, what can I do here? We scan the materials. I can broaden this out to S&P 500. And now I see I have 19 matches. Let's scan that one. Okay, we've already got the MACD sorted, so I have AVY, I have MOS, a couple here, 1, 2, 3s, right? So NUE, Dow, DD, Ball, Mosaic, AVY. And I'm going to take time to look at all of these, but I did want to look at one of them, which was, I think it's the DD I wanted to take a quick look at. Yeah, DuPont. Okay, now DuPont, a little bit cheaper stock, $48. We're going to invest up to $500 here. Again, our job really is to determine whether this is a valid buy signal based on our rules or not. And so looks like it is. We have a green arrow on the MACD. Big move today. Wish we would have caught this one yesterday. I just didn't do this yesterday. But yesterday we had the valid buy signal, and we could have caught a nice 5% move today. But, you know, some people, again, would say, well, earnings is coming up very soon. I don't want to buy this close to earnings. That's fine. We're going to go ahead and put an order on this anyway. If I put my cursor on today, I can see the moving average envelope, just right up there. Look at right underneath studies. It says 41.49 is our stop. So 41.49. And how do I buy it? Right click, buy custom with stop. We're going to put an order in there at 47.83 because that's just the closing price. Okay. We said our stop was where? 41.49. Make that good till canceled. And how many shares can we do? Maybe 10, 11 shares would put us there at about $500. So we're risking about $6 per share. Now, this is another technique. In addition to investing only up to $500, we've also said that we don't want to risk more than about 0.5% of our $10,000 portfolio, which is about $50. So if we're risking about $6 per share here, we may want to go that route and buy like 8 shares. Because if it does go hit that stop, that'll be pretty close to a $50 loss. Okay. So again, we just reviewed the order. 47.83 limit may not fill. If it gaps up, we'll have to pull back a little bit. We have a stop triggered at 41.49. No guarantee to get filled there. We send that order off, and now I've got an order working for us tomorrow. Okay, so that's taking a look at DD. And for homework, okay, for homework, what I want you guys to do is either go back and watch what we've done here, but for homework, what I want you to do is intersect here with S&P 100 first. Go over here to industry. What was the other new player here? Consumer staples. And do all consumer staples and then run that scan. And there's 10 stocks it looks like that are in there. I'll go ahead and run it here. I want you to go look and just analyze a couple of those to see if they have a valid buy signal for you based on your rules. And again, we also have that, the survey there in the chat. Please take a moment to fill that out. If you haven't subscribed to our channel, please do that. Also, if you find the information useful, love to see a like there. That's like getting a round of applause for the coach. I want to give a shout out to Barb for helping in the chat today. And let me just I've got a second here. Looking through the chats here. If there were some questions that I didn't get to or that Barb couldn't get to, then what we'll do is we'll put I'll answer those in the chat or in the YouTube comments. And Ted was asking about where we got energy. So let me quickly address that and then we'll wrap up. So Ted, it was just one of the top 3 performing sectors when we did our sector analysis there. So that's where we got that. So hopefully that's helpful for you, everybody. Have a great day and see you next time. Thanks, everyone.